Good morning. Welcome to Top of the Morning by Mint. Your weekday newscaster brings you 5 major stories from the world of business. It's Wednesday, April 30th, 2025. This is Nelson John. Let's get started. Bajaj Finance just gave its shareholders 4 reasons to celebrate. The non-banking giant delivered a windfall on April 29th, announcing a special dividend, a final dividend, a stock split, and a bonus issue, all alongside strong March quarter results. Here's the lineup. A 44 rupees final dividend and a 12 rupees special dividend riding on the successful IPO of Bajaj Housing Finance. A 1:2 stock split, meaning every 2 rupee share will now be split into 2 1 rupee shares. And a 4:1 bonus issue. Shareholders will get additional 4 shares for every 1 share they own. Record dates: May 9th for the special dividend and May 30th for this final dividend. The annual general meeting is scheduled for July 24th. Financially, Bajaj Finance posted a robust 16% jump in standalone net profit to 3,940 crore rupees, while net interest income up 21% year-on-year. Asset quality stayed stable with gross NPA at 1.18%. With asset under management soaring 26% to over 3 lakh crore rupees, Bajaj Finance is not just rewarding shareholders, it's setting the stage for even bigger growth. Infosys trims again and offers a softer landing. Infosys has reportedly cut another 195 trainee jobs at its Mysuru campus after fresh recruits failed internal assessments, according to a recent report. This marks the IT giant's 4th layoff wave since February, pushing total job cuts to around 800. An internal email dated April 29th told trainees that they had not met qualifying standards despite extra training, mock assessments, and 3 attempts. Infosys hasn't officially confirmed the cuts, but reiterated its long-standing policy: failure in mandatory assessments means exit. However, it's offering a safety net, tying up with Upgrad and NIIT to offer free upskilling programs. Around 250 affected trainees have already enrolled, while 150 others opted for outplacement services. Infosys is also offering 1 month's pay, travel allowance, and even funding a 12-week BPM training for potential rehirees. Interestingly, even as it trims entry-level staff, Infosys plans to hire over 20,000 freshers this financial year. CFO Jayesh Sangrajka confirmed after its Q4 results. Infosys shares closed slightly higher at rupees 1,497.40 after the announcement. Altera is putting its money where the future is, in India's clean energy. The world's largest climate-focused fund, Altera, has pumped $100 million into Mumbai-based Erin to supercharge renewable projects across Rajasthan and Andhra Pradesh. The investments made through the Altera Acceleration Fund marks the company's first direct bet on the global south. We are capitalizing capital into tangible, scalable climate initiatives, said Majid Al-Suwaidi, Altera's CEO. Erin, backed by Brookfield's Global Transition Fund 2, plans to develop up to 11 gigawatts of solar, wind, and battery storage capacity. It recently signed a deal with NTPC to supply 300 megawatts of green power. Connor Teskey, president of Brookfield, called the partnership with Altera a smart move to support India's energy goals while boosting economic growth and energy security. Launched during COP28 with a $30 billion commitment from the UAE, Altera aims to mobilize $250 billion globally by 2030. India's green energy sector is booming, with the government targeting 500 gigawatts of non-fossil capacity by 2030, up from nearly 270 gigawatts today. Crystal Project's green investments will jump 5-fold to 31 trillion rupees in the next 5 years. UltraTech's Cement is laying down big plans for FY26, and it's betting on size and speed. India's cement giant is chasing higher market share and tighter cost controls this year, aiming for double-digit volume growth well ahead of the industry's 7 to 8% pace. After a slow start to FY26, thanks to heat waves and an urban real estate lull, UltraTech expects demand to bounce back. Its recent acquisitions, India Cements and Kesoram Industries, are key to fueling this growth. Faster integration is paying off. India Cements even surprised analysts by hitting EBITDA break-even faster than expected. By FY27, UltraTech's domestic grey cement capacity is set to jump from 183.5 to 210.5 million tons, boosting its market share to around 27%, according to JM Financial. The company is also targeting big cost savings, 300 rupees per ton by FY27, with 86 rupees already shaved off in FY25 through green power use, waste heat recovery, and better fuel efficiency, reports Ms. Harsha Jitmalani. Still, stronger cement prices will be crucial for margins. Encouragingly, April saw a price uptick. Despite high capex and an elevated net-to-EBITDA ratio, UltraTech expects to bring debt down sharply post-FY27. The market likes what it sees. UltraTech shares just hit a 52-week high, rising 19% in the past year. India's shipbuilding dreams just got a major push, with 25,000 crore rupees on the horizon. The government's Expenditure Finance Committee has cleared a 25,000 crore rupee Maritime Development Fund (MDF) for FY26, aiming to make India a global hub for shipbuilding and maritime infrastructure. Cabinet approval is expected soon, paving the way for funding to start flowing by the second quarter. The centre will pump in about 12,250 crore rupees, with major ports and global funds chipping in the rest. MDF will offer long-term, low-cost debt and equity support for shipbuilding, port modernization, cruise tourism and inland waterways. There's a massive opportunity to capture market share from China, South Korea and Japan, said Kuljit Singh of EY India. India currently holds less than 1% of the global shipbuilding market and spends around $75 billion annually on leasing ships. Unlike earlier plans to tuck MDF under NABFID, the government opted for a dedicated fund to better serve this specialized sector. Loans may stretch up to 25 years, aligned with a ship's life, and tax incentives are also on the table. Experts say India's version could mirror successful maritime financing models like the US Federal Ship Financing Program, unlocking competitiveness and reducing foreign dependence. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode that will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a wonderful Wednesday.